Welcome to the Funtendo Market Report, your premier source for financial news, coming to you on this fine March 7, 2025. Don't forget to like, comment, and subscribe. I do hope you're seated comfortably, perhaps with a nice cup of tea in hand, because we've got quite the market rundown for you today. And before we dive into the financial chaos, be a dear and give us a like, leave a witty comment below, and of course, subscribe for more sharp market insights. Right then, off we go. The Dow Jones Industrial Average has given us a bit of a lift today, closing at 42,801.72, up 222.64 points, a 0.52% increase. The S&P 500 followed suit, adding 31.68 points to settle at 5,770.20, a gain of 0.55%. And the Nasdaq, ever the ambitious climber, saw a rise of 126.97 points, closing at 18,196.22, up by 1%. Clearly, the markets are in rather a cheery mood. But why? Much of today's optimism stems from the latest inflation data showing a slower than expected rise in consumer prices, sparking renewed confidence that central banks might ease off the aggressive interest rate hikes. Investors are lapping up the news like a cat with a saucer of milk, hoping for a softer stance from the Federal Reserve. Meanwhile, tech stocks led the charge, driven by fresh AI advancements and investor enthusiasm for semiconductor growth, because, naturally, we can't get enough of artificial intelligence taking over, can we? Bitcoin, that ever so reliable roller coaster, is holding its ground at a staggering $86,607.31. It's up by a modest 0.20% on the day, but over the week, it's clocked in an impressive 2.89% rise. The crypto market remains abuzz with speculation about institutional adoption, regulatory shifts, and, of course, the eternal question, is this the new gold? Ethereum isn't slouching either, standing at $2,141.28, up by 0.49% today, with an even stronger weekly performance of 4.07%. And let's not overlook XRP, which has been enjoying a bit of a breakout moment, up a dazzling 11.69% over the past 7 days. Seems someone's been sneaking their Wheaties. Now, while equities and crypto are reveling in optimism, gold, our beloved shiny safe haven, is having a bit of a moody day. It's dipped slightly to $2,917.70 per ounce, down 0.30%. But let's not be too hasty in dismissing it. With ongoing geopolitical tensions, because of course, there's always some international turmoil brewing, many analysts still see gold as a strong hedge moving forward. With central banks stockpiling the metal and inflation still a lingering concern, don't expect gold to stay in the shadows for long. Oil prices, on the other hand, are making a bit of a comeback. WTI crude is up 1.04%, sitting at $67.05 a barrel. This, of course, comes as OPEC Plus continues to play its usual game of cat and mouse with production cuts and supply adjustments, while ongoing conflicts in the Middle East keep energy markets on edge. Toss in concerns about Chinese demand recovery, and you've got quite the cocktail of market influences. Meanwhile, consumer news is showing a mixed picture. While wages have increased slightly, the rising costs of essential goods like groceries are making life harder for the average household. Food prices have been creeping upward, with staples like bread and dairy seeing notable jumps. This is putting pressure on consumers, who are becoming more selective about discretionary spending. Speaking of market pressures, trade negotiations between the US and Europe over tariffs are adding a new layer of uncertainty. Concerns over increased costs on imports and exports, particularly in the auto and technology sectors, have been weighing on investor sentiment. Businesses are bracing for potential disruptions, and markets are keeping a close eye on whether these negotiations take a turn for the better, or the worse. Meanwhile, the housing market continues to be a topic of concern. Mortgage rates have been fluctuating as the Fed debates its next move, leading to some volatility in real estate stocks. Buyers are hesitant, and affordability remains a pressing issue. While some areas are seeing price corrections, demand remains high in key urban centers, creating a divide between those who can afford to buy and those stuck renting indefinitely. Consumer confidence in the housing sector has been shaky, and real estate investors are treading carefully, waiting to see how interest rates play out in the coming months. And speaking of volatility, let's not forget the VIX, the so-called fear gauge, which has taken a dive down to 23.37, a drop of 6.03%. Translation: investors are feeling just a tad more confident, or at least they think they are. Whether this is justified optimism or just a bit of wishful thinking remains to be seen. The biggest winners today have been semiconductor stocks, riding the AI wave with enthusiasm, while traditional retail stocks are feeling the pinch as consumer spending habits shift in response to inflationary pressures. Looking ahead to next week, gold will be one to watch, with analysts expecting it to hover around the $2,900 mark as inflation and global instability remain key drivers. If central banks continue their buying spree, we could see gold climb right back up. Meanwhile, the stock market will be watching upcoming job reports and Fed statements with bated breath, as always. The broader economic picture remains uncertain, with global growth concerns and shifting monetary policies shaping the investment landscape. So, there you have it, a rather packed day in the markets with plenty of excitement, a bit of uncertainty, and, as always, an abundance of speculation. Next week promises to be equally thrilling, with key economic reports, global events, and tech earnings shaping investor sentiment. Thanks for tuning into the Funtendo Market Report. Don't forget to like, comment, and subscribe, and I'll see you next time for more financial adventures. Cheers!